welcome back to the channel. In today's video I'm going to be going through the only rule you need to understand through and through in order to be able to trade any sort of market situation, be it bullish or bearish, and to find yourself opportunities to enter the market in any sort of market situation. As I've already said, I have made a full document for this very topic, explaining it through very clearly. I have also made a full video on the course for members, so if you want to join, $140 for course, signals, everything. The link is going to be in the description. This is the only link I have, by the way. I know a couple of people have been scammed, so yeah, watch out for that. This is the only link that I use. But as I was saying, I'm going to be going through how you're going to be able to trade any sort of market scenario and trade buys and sells in any sort of market, be it bullish or bearish. And yeah, I'm not going to waste any time. Normally you guys will know that our normal strategy will involve us trading buys in a bullish market. If it's bullish, we're only going to look to enter from areas of demand, taking the market higher. And if the market is bearish, we're going to only be entering off of areas of supply, looking for the market to tap our areas of supply before then looking to go lower, right? I went through that in the most popular video now that has almost 200,000 views. If you haven't watched that video, make sure you go and take a look at it. But basically, I said that we only look to buy and we only look to sell in bullish and bearish markets respectively. However, I've refined that strategy, and I now believe that there are certain times where you can sell in a bullish market and you can buy in a bearish market, right? I don't know if I said that the right way, but there are certain times where you can do the opposite of the trend. So if the market is bullish, you can look to sell, and if the market is bearish, you can look to buy, right? What are those certain times, right? Those certain times are when you identify a market is overbought or oversold. What do I mean by that? Normally, if the market is bullish, right, you have a trend line that the market will touch multiple times, and then the market will continue moving upwards, right? And there are certain times where the market will be severely overbought in a bullish market, right? Say for example, all the way up here, the market has broken above the top half of our trend, right? It is still in a bullish market. However, up here would be a very bad time to enter buys in this market because the market is very overbought, right? And you don't need any sort of indicator. I know multiple people may use the RSI and they may associate the phrases overbought and oversold straight away with the RSI. You do not need an RSI indicator in order to work out when a market is overbought, oversold. All you need is a trend line. You draw in your trend line, right? And the closer the market is to that trend line, the less overbought it is, and the further away it is, the more overbought it is. Right now, we are very far away from this trend line. The trend line is down here, and the market is all the way up here. Therefore, this market all the way up here is very, very, very overbought. Up here, the market will not continue pushing upwards. It will start to retrace, right? It will start to come back down. What you can then do is, despite the market being in a bullish, you can sell the market up here, bringing the market into discounted areas, aka areas close to the trend line, before then looking to buy the market up again, right? Which is what I do again and again and again, right? And in this trade right here, you'll notice, if I zoom out for you guys, the market was bullish. The market was forming lower lows and lower highs. This was a high, or lower high again, lower high again, and lower high again, right? The market was doing that again and again and again, right? However, I was able to buy the market to a pro-trend area. Buying the market down here, selling the market here, right? If I show us, selling the market here would not have been a good idea because our trend line, if I draw in the trend line that what the market was respecting, was up here, right? If I just draw it in using all of these touches, the trend line was up here. So what I wanted to do was I wanted to bring the market to my trend line, to an area here, before then looking to hold ourselves, our pro-trend sells, taking the market lower. So what you can do is you can buy the market to your trend line before then selling it down to continue that trend down, right? Which is exactly what ended up happening. If I play this market, what I did was I bought the market from a 2-hour area. If I show us, this was my 2-hour area. Do you see this doji? This was where I entered the market. Stop loss goes just below that 2-hour area, and it triggered perfectly. If I just show us, perfect trigger to the pip. You can't get a more sniper entry. The market then pushes all the way up to my area. If I just show us, it went all the way upwards. May have done a bit of retracement action, but then went all the way up, right? Then what ended up happening was the market came into this area here. There was a nice 1-hour area. If I show us and I zoom out for us, you will notice that this was the 1 hour area I'm talking about. Very valid, as you can see. This 1 hour area is very valid because it's broken structure to the downside through areas here, and also we have a volume increase that we look for that makes that area valid. The market has then tapped that area and then sold off aggressively all the way down. If I just get out of replay mode, the market has now continued to sell down all the way down, right? You can do this again and again and again. This is not the only trade where I have bought the market to a trend line before then selling down, right? I can show you another example right here on Instagram. If I show us on this example right here on GPCHF, the market was bullish. However, buying the market up here would have been a bad idea. So what I did was I sold the market to a discounted area down here before then buying the market up. I will show us that on the actual chart. So if I get GPCHF open and I go on the daily time frame, you will notice GPCHF has been bullish for a very, very long time, and it has been continuing. It has been bullish for a very long time, and it looks like it's continuing to be bullish. However, if I replay the market to here, right, buying the market up there would have been a bad idea because there was multiple areas of imbalance to fill. There was a nice 2-hour area of demand. If I show us, this is the 2-hour area of discounted demand that I was watching. And so I wanted the market to come to that 2-hour area of demand before then continuing that bullish trend upwards and continuing to be bullish. So what I did was I sold the market from this 5-hour area. There was a nice 5-hour area. As you can see, this is the doji that I was seeing. It broke structure below all of these lows and had that volume increase in the form of an engulfing candle. So this was a very valid order block. I then sold the market from this order block to my 4-hour area of demand. If I show us that 4-hour area of demand I'm talking about, very clear area of 4-hour demand right here, broke structure to the upside and also give us that engulfing candle. So it's very valid. So I was selling that market to my demand before then pushing upwards again. And as you can see, market tapped, came to our area, tapped us, and as you can see, ended up pushing up very clearly, as you can see, right? Picture perfect setup, and then continued pushing upwards, right? You can do this again and again and again. And in this document, I explain how there are certain times where the market is overbought and oversold, and that you don't necessarily need the RSI, right? If I just show us if I read this here, you'll see that we have a bullish market forming higher highs and higher lows. But here, if I show us and I just make this, can I make this a bit bigger? No, it looks like I can't. But as you can see, the market has had an aggressive push to the upside, right? Here, if I read this out, it says, despite the market being in a clear uptrend, forming higher highs and higher lows, buying the market up here would not be a very good idea because the market is overbought. What do I mean by that? I mean the market has pushed up aggressively and will need to retrace at some point. What you can do instead of buying the market here is you can sell the market to a discounted area before then looking to buy the market up. I'll read out what I said word for word. Instead, what you could do is you could sell the market, despite the market being in a clear uptrend, to a less overbought area where you could then buy the market following that trend, right? So I am selling the market from here, a severely overbought price, bringing it to a less overbought price before then looking to buy the market up. Those of you that have watched that popular video that has almost 200,000 views, as I've said, may be arguing, okay, but if you do that, you're breaking your rules. And there is nothing wrong with breaking your rules. If you guys follow me on Instagram, you'll know that I posted this. Every successful trader should have a clear set of rules. However, the last rule of every rule book should be know when to break your rules. If it makes sense, don't not take the trade just because you're scared of breaking your rules. Breaking your rules is sometimes fine, and there is nothing wrong with doing that. And there's multiple examples of me taking trades like this. If I just show us my Instagram, both of these trades, GPCHF, were posted to the group chat. If I show us proof of that, this was broken down in a weekly breakdown video. By the way, now I do weekly breakdown videos for the members, and there are almost 1,000 members in the group chat, so don't miss out. If I just show us, there are literally 1,000 members in the group chat, and we have loads and loads and loads of great trades. For example, literally one of our members on Euro USD made 21% on Euro USD in one day. So that's amazing. If you want to be able to join this, First link in the description will send you to this link right here, where you will be able to join and get courses. You'll get a full course, Zoom calls, you'll get trade ideas, you'll get signals, you'll get everything, community to an access. You'll get access to a community of 1,000 members, and all of that for a one-time payment of $140. No brainer, go for it. It will be the link in the description. So yeah. Also, I would like to address something. There are lots and lots of members on Telegram that have been scammed out of lots and lots of money by people that are pretending to be me. My Telegram, if I show us my Telegram is under all of my YouTube channels. If you go here, you go to your channel, and you go to here, and you go read more. Let me just show you. And you come to here, you'll see my Telegram is here, MahadFX YT, nothing else. There are certain other accounts like Mahad_990, MahadFX YTT, so with 2 T's, stuff like that have been scamming people. Don't fall for those scams, because there are people that have lost out on hundreds, if not thousands of pounds, right? Sometimes there are people that have fallen for those, so don't fall for those. All of my socials are in the description. So yeah. Back to what I was saying, I have an announcement. In the last video, I announced that I would be giving away mentorship to 5 lucky people. That will be happening today. So the date today is the 1st of August. I'll be posting that. I'll be doing a live giveaway of the mentorship on Instagram. So all you do is you go to the description on this video when it's posted. You go to Instagram, and I'll be doing a live video later today. So a couple hours after this video comes out, I'll be doing a live video where I'll just do a random selection of all of the comments from the latest video, so this video right here, and I'll be giving away a mentorship to 5 lucky people. So yeah, that's literally about it. In order to, just as in conclusion, what you do is this one rule that means you can enter in any sort of market is you look to see if a market is overbought or oversold. If the market is overbought, you can sell down to a discounted area before then continuing that trend upwards. And if the market is, if I go to NZDCHF, if the market is oversold, just as it was down here, right? Say the market is oversold down here. What you can do is you can buy the market to an area here before then selling it back down, right? Let me just get the NZDCHF Owanda chart out, because that's where I was doing all of the analysis. NZDCHF, what you can do is, let me as an opening NZDCHF Owanda, here we go. You can buy the market from an oversold area to a discounted area before then looking to sell the market back down, right? I hope that has helped you guys out. Please make sure you like, comment, and subscribe. I'm going to be looking to post more videos now. I hope this video has been helpful, and it's been a pleasure being back, and I hope to continue posting more. I've been MahadFX, and I'll see you guys soon.